Fed raised rates 25 basis points and then talked about how resilient banks were, only to watch another bank fail about 2 hours later. We're going to talk about what this means, how it's going to affect Fed credibility, what to expect based upon this new bank failing. We need to go over technology, how technology is going to be affected by this. But most important, we need to talk about the futures market and what exactly happened after hours. So we're going to jump right into it here, guys. We have a lot to go over in a very short time to do it. So here we are, and this is exactly what happened. Fed comes out, they raise rates 25 basis points, and they say they'll look at things and they'll determine how things are going. Then they will make a decision on what to do with rates. We're going to drill into that in a moment. But you'll see this little doji that's just sitting there all by itself right here. Right? And that's really a very important distinction. Now, we literally gap down 1 hour later. So the market closes, we close at 5, reopen at 6, and you literally gap down on the index. The only reason for this is the news that we're going to lose another bank. Now, here we are with the Nasdaq, gapped right down this evening. Okay, right on that news that we're going to lose another bank. The 13.3 level, we all know that that's been an area, bone of contention. We could see the large drop here on Tuesday at 9 o'clock. You can see how we were unable to get over that during the Fed. When the Fed moves, you always want to watch that first 5 or 15-minute bar as soon as that 2 o'clock hits. And then you want to see how you act over that area. Here we are on 5 minutes, and I'll show you exactly what I mean. So when you get that initial move that the algorithms, you always set levels on that. Whether you use 5 or 1, it's up to you. And those levels will tell you everything. In other words, we were unable to ever close for 5 minutes above that doji, ever. Okay, we spiked over it like we were going to, only to reverse over and over again, finally to make a decision, and guess which way we closed. Upon that closing, you could just see we got weaker as the day went on. And this is significant. Okay, this is significant, and we should be paying attention to this. So we raise rates. Fed comes out and says, well, we're probably going to not raise rates next time. We're going to maybe pause, but we're going to look at the data, and the data is going to be driven. This reaction was negative to a pause. And I think the reason for that is because people are a little afraid of a recession and how bad that recession is going to be. Now, just for your own education, you can do the same exact thing here. We were actually watching this live. I did a live stream on the Fed today when the Fed announced the rate hike. If you don't subscribe to the channel, I would suggest that you do. Everything we go over here is extremely timely and actionable. If that's something you're looking for, you found your channel. You see your level right in here? See how you broke? I mean, that was the whole move. Now you could say, oh, I want to short into these. Sure, but you don't know what he's going to say, and you don't know how that's going to go. This is a clear break, and you can define it. The problem that we had today is if we drill into this on a 1 minute and we start really getting in there, well, we're going to notice something, and this is what made it so difficult today. You just had Wick City. So even if you were using the 1 minute from that 2 o'clock on, and you can see that that 5 minute is very similar to that 1 minute, right? You never got over that 1 minute bar. Every time you broke, you reversed, broke, reversed. So you started getting Wick City down here, and usually that means that you're going to see buyers and have buyers step in. And that's not what happened. By 3 o'clock, people didn't like what they were hearing, and they started to sell. He started with the conversation, first statement out of his mouth before he even talked about rates, that the banking industry is sound and resilient. Now, the regional banking sector would disagree with this. It's down about 10% on the sector overnight. We've lost $500 billion in market cap of regional banks in the past probably 45 days. Tonight, PACW comes out and says that they are looking at all their options, all their strategic options. You know what their strategic options are? Nothing. They're going to wind up selling their deposits probably to JP Morgan or someone else. And the stock is at $2 after hours. Okay. This is a enormous and huge embarrassment to the Fed to come out at 2:30 and give a speech that the banking system is sound and resilient, and then you lose another bank in California. I have absolutely no idea what you guys are doing out there, those people that are in California, But someone should call the San Francisco Fed and maybe look at the rest of the banks, because this is getting ridiculous. FRC was out there, okay? We lost FRC. SBNY was out there. We lost SBNY. Oh, I'm sorry, SIVB was out there. Okay, now we're going to lose PACW. All right, so it's impossible for us to go out there and say that the banking system is sound and resilient. The answer is no, it's not. And as much as I wanted Monday to be the end of this with FRC, when the FRC was announced, it clearly is not over. A matter of fact, you're going to start seeing a run on banks now. Now, I know that might sound like, oh no, we've seen too much. No, because people are going to start panicking. And the panic's going to be, well, wait a minute, now we're losing another bank? How many banks are we going to lose? How many times is the Fed going to raise rates and destroy a bank? Okay, it's not a coincidence that the Fed raised rates today and that the tier one moves. And when the tier one losses move because of what the Fed does, because of the bond market, guess what happens? PACW looked at that and was like, we're going to have issues. We need to strategically look at what to do about this if they're not going to stop raising rates, because it marks their tier one debt. Now, the issue is not just PACW. You're watching this spread everywhere right now after hours. You're watching Wall, which was one we were actually trying to short today, around 32 in the alpha chasers community, which is right around 20 bucks right now. So this one closed at 29 and it's down to 20.85 because it's considered that it's going to be the next bank. I don't know if it's going to be the next one. I'm not really sure. I know anything that's out west right now is in a lot of trouble because nobody has any faith in, and I'm just being honest, nobody has any faith in the San Francisco Fed right now and how they have jobs. It's baffling. But here we are, and this is down about $10 after hours. There will be a run on this bank. Okay, I know that sounds like hyperbole, but when this starts to happen and this hits the headlines tomorrow, and it is Fed says banks are sound and resilient only to lose another bank 90 minutes later. The lack of credibility, it cannot be underestimated, meaning no one's going to believe anything he says. Now, the other thing on this, and you can comment on it below, there is no way that they're not cutting interest rates this year. There's just simply no way that they're not going to have to cut interest rates this year. This is going to spread, and they're going to have to do something about it. It's not getting better, it's getting worse. So this regional banking crisis, the next one that I think is going to have a problem is I think it's going to be this WAL. And it doesn't matter which one it is. They're taking them all down. Okay, so this is one that I own, and I even commented in the Alpha Chasers community. Extremely disappointing action. We were doing exceptionally well with it. Bought it at 120, went to 130, and now you can start seeing it's just coming down with the rest of them. I did add to this one tonight. Okay, so to me, this is just absolutely silly. They just came out with earnings, and they just happened to only beat by 332% on the revenue front because they were allowed to buy assets, and their earnings only grew by 1,500%. So I think I'm okay here. What I would suggest that you do is if you want to get involved with this, only buy the ones that are either one, allowed to bid on assets, or two, were allowed to bid on assets and won. Okay, that would be FCNCA if that comes down. Okay, they would be the two that I would tell you to focus on if you're looking long term. But I don't think overall that the rest of them are safe. I really don't. I think that this is going to get a lot worse than I first frankly anticipated. I don't think this is the last shoe to drop. If PACW can go under from where it started, we've been looking at this graph for some time. Let me click off of here so we can get into this and really drill into it. We've been talking about this graph since March, and the areas of problems were over here. SIVB, SBNY, FRC. This was our area up here where you had unrealized losses of tier one capital that were well over the median of 60%, right? That's where our issue was. So if we take a look at this, blow this up a little bit more, pull this down here. Now, if we take a look at this, well, here's PACW at the median line. Okay, so if PACW, PAC West is at risk, Wall's at risk for sure, right? Because Wall has higher than 250,000 deposits percentage than the median. Okay, so Wall's at risk, CMA's at risk, Wells Fargo's sitting right next to it, right? And then you start looking at the losses to the right of that. Bank America, FITB, Key, HBAN, TFC. What you have to realize is that when this graph started in March, this is where PACW was. We can all explain that it's an outlier, but guess what? If you start seeing withdrawals out of these banks, this is going to be a real issue. Now you're seeing RF, MTB, NYCB, PNC. PNC was allowed to bid on assets, so I think we're okay there. But if we take a look at this, anything that's on the left-hand side of this median line with these unrealized losses, after today's rate hike, anything on the right side of this is now at risk, okay? I still think Wall may be at risk just because you could have a deposit run. You could see EWBC have a deposit run. I think this is going to spread more than I first anticipated because it didn't end with FRC. It's exacerbated with FRC. You might want to screenshot this. I've posted this several times, but it's been working like clockwork. I was shocked they allowed FRC to continue to trade, but here we are. Now we have PACW, and I think some of these other banks are going to have some problems, and we're going to have to see how that acts tomorrow. Now, that said, if we take a look at KRE, we have to understand that not every bank is going to be bad, but we don't want to buy the index. We don't want to buy this. I'm just going to suggest that you look at the banks that were allowed to buy assets. I actually bought this after hours, and I'm doing quite nicely with it. I would focus on those names. Now, the other thing that you can do, and I walked through this a month ago, and this will do exceptionally well tomorrow. It's already up again. I guess it was about a month ago, early April, and I'll mark it off from wherever that was. And we went over it today, and a couple guys actually did this trade, but what I was suggesting was you want to go long KBE, the large banks, and you want to short the regionals. Well, that's a 6.5% dollar trade so far. So in other words, you go long KBE and you short KRE, and they're up 6.5% on the month on that trade. The large banks are not going to go out of business. They're going to get business because of this. So keep that in mind. I cannot stress enough how important tonight was and how it changes the landscape. We have a bank. We were told things were fine. We have a bank. We were told we were resilient. We are clearly not resilient. You're going to want to watch XLF tomorrow. You're going to want to watch the regionals and how they act. I personally do not think anything will be safe, at least off the open. Now, SMH, we held above the trend line and the 5 today, but there's a much larger issue brewing now. So if we take a look at this and we make this a 5 and we look at the SMA of this and drill into it, well, we are now below the 5 and we closed at the low. Okay, so a test of this trend line seems reasonable. I think that the banking sector is going to scare the heck out of everybody tomorrow. That's what I think is going to happen. So I think that we have some pressure that's going to come in, and we're going to get into that. Now, we saw that pressure today with names like NVIDIA, where we tried to rally and we just couldn't. It doesn't mean it's going back to 90, but it does mean that we might have issues here, okay? You can see how we acted in the first 5 minutes before finally breaking out above that, only to come right back down after Powell started speaking and then close at the lows of the day. The other issue that I would say to you is they're starting to inflate option pricing a little bit. So we need to be aware of that. Now, this I found fascinating. And Meta, in my opinion, I like the name a lot, but I don't like what I heard today. So if the government is going to go after a revenue stream of theirs, well, that's not ideal. And then we start looking at this today. Now remember, this is a 5 SMA. You start looking at this and going, well, wait a minute. We cracked, but we bounced. Okay, well, maybe we're going to bounce around. Maybe we're going to hold. Maybe we're not. But this is a long way down to gap fill. Even if we gap fill to here, that's a long way down. So these are things that we need to watch and pay attention to. Even Microsoft today, we closed below the 5. So we're starting to see cracks in technology. This is not going to get better because we lost a bank today. I don't care if they're bidding up a little bit right now. It's not going to make people want to commit or allocate capital right now. It's going to scare people. You might see short squeezes and things like that, but it's going to scare people. So I think it's more important to go over key levels. We'll do this tomorrow live as well. But I think that the best value that I could provide this evening is just to go over some key levels so you know what areas that you're going to want to watch tomorrow and how we act. The very first thing you're going to want to do is watch the 6 o'clock open. Okay? You're going to want to know where that 6 o'clock open is tomorrow. Now, if you zoom in on this on the hourly and you just look at that, right, you're going to want to just leave that there for a moment. Now, we know the upper end of that is right here, right? So we know 13.1 1.11. We have to watch that on the hourly. This is where we sold down on Tuesday, bounced back up. We can clearly see how this red bar is in charge and we're unable to get above that. And we can see the slope here pretty clearly and how we're unable to break that slope, right? So let me just mark that off for everybody so that you can see it. That's pretty clean, isn't it? So you pretty much know where your kill zone is and where your resistance is. Now you're at 13,000. So what we have to do is say, okay, well, this is where we're at. Now, what are we going to do about it? Well, the important thing is to focus on where those key levels are and where we can get to. Now, if we pull out a 2 hour and we just look at where the breakout happened, well, that gets you down to 13,000. And that gets you into a range that if we go out here on, let's say, a 4 hour chart, and we just zoom out and just look at some levels and go, okay, well, here's 13 right in here, right? 12.9. So that 13 range, you have a little beam right in here that you would probably want to watch and make sure that you hold. If you break 13, you're going to have problems. Now, I don't know if we're going to break 13, but if you do, then you're looking at 12.8, and then they start walking you down, and then you start looking at like 12.6 down here, okay? So these are the levels. You might want to screenshot this. I'll blow it up for you. These are the levels that you need to watch tomorrow, okay? Starting with the smallest, then the larger, and then move from there, okay? Is this broken? No, I don't think it's broken, but I think that we could have some kind of course correction. It might be healthy, quite frankly, considering what's going on in the banking sector. And that's what I would focus on. So I would pay attention to those levels. I'm going to say it again. I can't stress enough how embarrassing it is for the Fed to come out there and say everything is fine and then 2 hours later lose a bank. You can see the 4,200 level right there, come straight across. You can see it here as well. Every time that we tried to get near it, all the way back to August 2022, we were unable. Now, 4066 needs to hold. If this does not hold, we have a problem. If that does not hold, you could be coming down here, 3980. Okay. Yes, of course, 4,000 is a level. Anything with a number is a level, right? 440 is a level, 4,000 is a level. But where do you really have support? If you break 440, 3980, really you don't have anything. If you're looking at this, you don't have anything. You'd have to come all the way across and start looking up here for other levels. But this is where you're at, and this is what you need to focus on. It makes no sense to go through all the names tonight because right now you're in one big trade, and I think people are going to reduce their risk tomorrow until they can get a better handle on what's going on with the regional banks. Have a good night, everybody. Please comment on this format. Let me know. I like how I did this tonight, specifically just kind of give you facts in my opinion. And this is a game changer to me in the market. It's something that we're going to have to watch very closely tomorrow and see how we react. It would be great if we blow this off. It would be excellent if the tech sector blows this off. I just have a hard time seeing that happen.